Grizzle is excited to be joined by Mark Selby, the CEO of Canada Nickel. Now, they're working to deliver the next generation of low-carbon nickel to be used in electric vehicles. Mark, for those who aren't familiar with nickel, could you give us a brief history of the base metal, how long it's been around for, and what's primarily driven its growth?
Yeah, so sure. Nickel's really been only around about 120 years as an element. For the last 50 years, the key driver of growth has been stainless steel and alloys. If you look at the window of an airplane, that engine has a few tons of nickel in it, and stainless steel is used everywhere in all sectors of the economy. And because stainless steel is such an attractive property, it's highly recyclable. It's a very long life use piece of equipment, and so stainless steel demand has grown at 5 or 6% a year for the last 50 to 60 years, and that's driven nickel demand of 4 to 5% a year, which is about twice what you've seen for copper and carbon steel and some of the other things. So, and we don't expect that to slow down anytime soon. Obviously, what's exciting now is this long history of strong demand growth from stainless steel is now being joined by this big new use in terms of electric vehicle batteries, which is going to drive a huge amount of growth in a very short span of time through the remainder of the next 10 years or so.
Yeah, let's talk about that. What role will nickel play in the electric vehicle market, or how do you expect demand for EVs to impact nickel?
First off, why nickel is going to win in terms of battery chemistry and is always going to be part of the battery, regardless of what kind of chemistries emerges. Nickel has this great property. It has the highest energy density. What that means in practical terms is that gives you the most range in a car, and everybody will want the longest range possible. And so, and again, they'll want batteries on the biggest vehicles possible, which means that there is always going to be a role in nickel in whatever battery formulation comes along. And the key part now is we are on this S curve, and what that means is, again, for any kind of new tech, things grow slowly, and then all of a sudden you hit this adoption, really steep part of the adoption curve, and we really are at the steep part of the adoption curve. And so what that means is you're going to see growth rates of 30, 50, 70% year in, year out, over a short, probably the next 5 to 7 years, where this adoption is as long as car companies can get enough models out, we're going to see really, really high growth rates. And again, analysts are just not used to putting those kind of big numbers in, and so most nickel demand forecasts from most analysts are way under what we believe. I believe that nickel demand is going to look like through the remainder of this decade.
In terms of batteries for EVs, there haven't been a lot of different battery chemistries throughout the years. Can you explain why that's the case?
Yeah, no, that's a great point. So, the NCM batteries, the nickel, cobalt, manganese batteries we're using now, were actually developed in the 1990s. They weren't actually widely used until the 2010s. And very, very simply, when you either hold it in your hand or have your family sitting on top of it underneath a car, the safety issue is absolutely paramount. So, before car companies roll out 10 million of these things, they will want to make absolutely sure that there are no issues in terms of the operability, in terms of the safety of any new battery technology. So yeah, there's lots of research going on, and I think we'll see new battery chemistries emerge as things go on, but those time frame to adoptions are 10, 20, 30 years plus to be able to get all the bugs out. So again, the battery suite between LFP on the low end and NCM for the more demanding applications, are really what's going to be the first wave and get us probably to 80 to 100% EV adoption before new technologies emerge.
In your view, has nickel supply kept up with this dramatic shift we're anticipating for EV demand? How do you see that all unfolding?
No, there's really kind of three structural issues with supply keeping up with the kind of nickel we need. So first off, all of the demand, all the supply growth has been coming from Chinese-controlled projects, basically in Indonesia. And so, why that's an issue. One is the type of nickel that they're mining, the way they process it. A huge portion of it comes with a very large carbon footprint. What we want in the West is low carbon sources of metal. So this high carbon sources of nickel that have filled the gap are not what we needed. And so, it creates this opportunity in the West for local supply. The other big thing is, the IRA, the Inflation Reduction Act. The reason the government is giving companies subsidies, giving subsidies in the U.S. is because they want to, get China out of the supply chain. So depending on Chinese controlled supply out of Indonesia, again, is not the kind of supply that's needed. What we need are, large scale scalable sources of nickel that have a very low carbon footprint. And the kind of deposit that we have at Canada Nickel, which is hosted in this ultramafic rock that spontaneously absorbs CO2, we think these ultramafic deposits, and there's a half a dozen other companies, that have these kinds of projects, we think these are really going to be the next wave of nickel supply, and the timing for them, in terms of coming to market as we need all this low carbon nickel, is almost perfect.
In recent years, we've seen the government make advancements to onshore production, not only for the auto industry, but also for the mining of critical minerals. Can you talk about that a bit?
Oh, no, that's it. The government's very clear that they want basically from the mine right through to the car manufacturing as much onshore as possible. And again, it's not just mining, it's across a range of activities. And so, that's where there's this window right now. There's a 5 to 7 year window that if you have a project that's available, the Canadian government just put out a 30% refundable tax credit on investments in the mining and processing of nickel and other critical minerals. So, in terms of the amount of capital and the cost of that capital, we're in a fantastic situation where the government is actually writing new checks, to build a mining project, which means in terms of those mining companies to having to go to raise equity in the markets, which dilutes existing shareholders, that amount of capital is going to be greatly reduced. Again, from people further up in the supply chain, they also want local sources. So again, you've seen GM with Thacker Pass, provide capital to that lithium project. You're going to see that around the range of critical minerals. And again, I don't think investors really understand just how much, effectively free capital or very low cost capital is available to build a mining project in this window. And we're fortunate at Canada Nickel to have one of those projects.
Now, shifting back to supply, I understand there haven't been many nickel discoveries outside of Indonesia. How do you see that impacting the supply story going forward?
Yeah, so the key piece with nickel, to make a nickel deposit, you need material to come all the way up from the Earth's mantle up to surface. And so to be able to make it, you need a big crack in the Earth, or something to happen back when the Earth's crust was very thin. So as a result, you don't find nickel in a lot of places. It's not nearly as common as copper or zinc, where you can find it in a bunch of regions. And so, the challenge has been, in terms of people looking for new nickel deposits, historically, we mined higher grade sulfide deposits, and now most of those are underground. The challenge is the last higher grade deposit, and higher grade meaning more than a 1% nickel grade, that had more than 1 million tons of nickel. And today we're in a 5 million, by the end of this decade, we'll be in a 5 million ton per annum nickel market. So 1 million isn't very big, but the last one that even got that little low threshold was Voisey's Bay back in 1992. So that was 30 plus years ago. So, despite all that, exploration, and even the last 3 or 4 years, we really haven't seen any new big discoveries, other than these bigger bulk tonnage ultramafic deposits like, what we have at Canada Nickel, where again, we think we're unlocking an entire nickel district. Because when you do get those rip in the earth, sometimes they're small, sometimes they're very big, and you get multiple deposits. And that's what we think we're, unlocking in the Timmins area right now.
Could you talk about the Timmins district and the opportunity there?
For sure. So, what consumers are, in the West are hungry for are local, low carbon, large scale sources of nickel. And these big bulk tonnage deposits like we have at Crawford, and like we think we have in this entire Timmins nickel district, the reason we're quite confident that we're going to find more Crawfords as we go forward is, there are certain types of mineral processes that effectively allow you to see the deposit with geophysics much more clearly than other kinds of deposits. And because there's a certain amount of magnetite, we can use magnetic geophysical techniques to get a pretty good sense of what the scale of those targets would look like. We've already drilled a half a dozen other targets, and we've hit the kind of mineralization that we're looking for. So, we've got a very high hit rate with that targeting approach. And in addition to Crawford, we have 20 other targets in the area. We've got 5 million tons of nickel on a 1.5 square kilometer footprint of this target geophysical footprint we're looking for. We have over 40 square kilometers of this target footprint in the Timmins district. So, we think it's still early days, but we're really, unlocking what, could be the potential to be one of the world's largest nickel sulfide districts.